The competition in the EV industry is heating up, and NIO is in the spotlight. You've probably heard about how NIO has been delivering over 400 cars daily in 2023, marking incredible growth. But the shadow of Elon Musk's influence is looming large over this exciting journey. The question on everyone's mind is this: can NIO turn its profits around despite the recent challenges and the game-changing presence of Elon Musk in the electric vehicle market? Let's dive into the details and explore the intriguing story of NIO's rise and the challenges it faces. NIO's delivery game in 2023 is nothing short of impressive. They've been churning out more than 400 cars every single day, which is a remarkable feat in the electric vehicle industry. Just think about it. That's over 400 families or individuals getting their hands on a brand new NIO EV each day. And the growth story here is fascinating. The deliveries have surged by a whopping 33.43% when you compare 2023 to the previous year. That's like going from fast to even faster. But what's even more intriguing is the quarterly breakdown. In Q3 of 2023, they delivered a staggering 55,432 units, which is a 75.37% growth compared to the same quarter in 2022. Q2, although a slight dip from the previous year, still saw 23,520 vehicles delivered. And in Q1 2023, NIO delivered 31,041 vehicles, showcasing a healthy 20.46% growth compared to the same period in 2022. These quarterly trends highlight NIO's upward trajectory in deliveries and its commitment to satisfying the growing demand for electric vehicles. The big question is, can they keep up this pace, especially in a market with so much competition and change? To answer that question, you need to look at what's driving NIO's impressive delivery growth. They've been making some strategic moves and working hard in a few key areas. First off, it's all about vehicle production. NIO's been ramping it up, producing more electric cars to meet the surging demand. More cars in the market mean more deliveries. Technology plays a huge role, too. NIO's been investing in cutting-edge tech, making their electric vehicles more attractive and functional. This not only keeps customers interested, but also sets them apart from the competition. They're also building up the infrastructure, which is essential for a smooth electric vehicle experience. Think battery swap stations and charging networks that make it convenient for NIO owners. And let's not forget about customer experience. NIO's been putting in the effort to keep their customers happy. Happy customers mean repeat business and good word of mouth, which is invaluable in any market. One of their smart moves has been offering delivery discounts. In a competitive market, price can be a game changer. By enticing consumers with discounts, they're keeping the customers rolling in. They've also introduced new models, like the EC6 electric coupe SUV. Fresh, exciting products help keep the momentum going and their market position strong. But it's not all smooth sailing. The EV market in China is a battleground, with big players like Tesla and other local EV manufacturers. NIO is navigating this landscape with innovation and competitive pricing, but it's no easy feat. What's even more fascinating is the role of government policies in China that are giving electric vehicles a significant boost. These policies, like tax incentives and other measures, are like a green light for the EV market. The Chinese government is actively promoting the adoption of electric vehicles as part of its broader environmental and climate goals. These incentives are essentially like a push, encouraging consumers to go electric. NIO's strategic moves are also worth discussing. They're not just relying on government support. To keep things exciting and competitive, NIO is offering delivery discounts, enticing consumers to make the switch to electric. It's a smart move because, in a market full of options, pricing can be a deal maker. But despite NIO's growing success, Elon Musk and Tesla still cast a significant shadow over the electric vehicle market dynamics. You see, what Musk does and how Tesla performs can send ripples throughout the EV world, including NIO. When Tesla makes moves, like announcing their earnings or cutting prices, it can have a notable impact on NIO's stock. For instance, Tesla's recent earnings report showed an operating margin of 7.6%, which was below expectations. This sent Tesla's stock down, causing a ripple effect that impacted NIO's stock. Now, when Tesla cuts its prices, which they've done recently, it can squeeze the margins for other EV companies like NIO. This is because, in the competitive world of EVs, pricing can be a decisive factor for consumers. If Tesla's cars become more affordable, it might affect NIO's ability to maintain its pricing or margins, making the competition even tougher. The challenge for NIO, as they aim to compete with Tesla's dominance, is that Tesla is not just a player in the EV market, it's a major game changer. They have a global presence, a strong reputation, and a vast loyal customer base. To stand out and succeed in this competitive landscape, NIO has to bring its A game and offer something exceptional. But before we continue, we just want to thank you for watching this far. Now, let's look under the hood at NIO's financial situation, particularly its gross and operating margins. This tells us a lot about the company's financial health and where it's heading. NIO's gross margins are currently in the green, which is a good sign. It means they're making a profit on each car they sell, but these margins have been shrinking on average by about 0.2% each year. So, while they're in the green, they're not exactly soaring. The bigger question is about NIO's profitability. Over the last 4 years, NIO hasn't consistently been profitable. This is a bit of a red flag for potential investors. However, there's a bright spot in the picture: their operating margins. These are growing at an average yearly rate of almost 50%. This shows that NIO is improving in managing its fixed costs and other overheads. But NIO is in a growth phase, and that's usually a phase where profitability takes a hit. They're investing in various aspects of their business, from technology to infrastructure, which requires significant spending. So, it's a bit of a balancing act. They need to keep expanding to compete and focus on turning the profit switch on. Moreover, it's essential to gauge how NIO stacks up against its Chinese EV peers, like Li Auto and XPeng. NIO's stock performance has its own unique story. It's important to understand the significance of this performance against its peers because it's a reflection of market sentiment and the company's competitiveness in the EV arena. Investors often look at how NIO measures up in comparison to its rivals as a key indicator of its potential. Now, let's talk about the challenges NIO is facing. One of the most significant hurdles is boosting demand and production to support profitability. While NIO is on a growth trajectory, they need to ensure that this growth is not just about delivering more cars, but also about delivering profits. It's a complex task, especially in a competitive market. NIO is not just focused on the Chinese market. They have their eyes on expansion into new markets, with Europe being a prime target. Their interest in establishing a dealership network in Europe is a strategic move. But European officials are concerned about the influx of Chinese electric car exports, and investigations into government subsidies could result in tariffs being imposed. Looking ahead, NIO's future growth plans are intriguing. They've officially announced that there won't be any new NIO-branded products entering the market in 2024. Instead, they're gearing up to unveil entry-level sub-brands with the codenames Alps and Firefly. This signifies NIO's ongoing plan to extend its reach within the electric vehicle sector. The road ahead for NIO is lined with opportunities, challenges, and new horizons as they aim to make a mark in the global EV market. So as NIO journeys into the competitive world of electric vehicles, there are uncertainties and challenges on the horizon. One of the biggest puzzles is how to turn a profit while staying competitive, especially when giants like Tesla are in the same arena. The financial picture, with shrinking gross margins, adds to the complexity. So, do you think they can sustain their impressive delivery growth and overcome the hurdles to profitability? Share your perspective in the comments below. We'd love to hear what you think about the future of NIO in the ever-evolving electric vehicle market. And while you're at it, make sure to smash the like and subscribe buttons down below. Additionally, I highly recommend watching this fantastic video if you want to know about NIO's stock performance updates. Just click this video right here. Thank you for tuning in, and stay tuned for more exciting content in the future.